it, I say, I am not a financial expert. Don't take anything I'm saying as advice. And then I thought, we do know an expert, and it's Jeff Jr. from Trajan Wealth. Jeff, I appreciate you being here. I know you're watching this very closely. What should the average person that's watching understand about what's happening right now?
Well, I think the average person just needs not to lose their cool. This is just a short-term blip, and, I can relate it back to, I was just pulling up some charts knowing I was going to get on the radio. Like 2014 is a good example. In 2014, you may not recall, we had the Ebola virus scare. And within a very short period of time, the market went down 10%, and then we found a cure, and then it rebounded. It came right up. So just don't lose your cool. Make sure your assessment to risk is where it needs to be.
When you, obviously, I'm sure your team is fielding calls from people that are concerned. What you're seeing happen now, is this solely in your mind? Maybe it doesn't matter, but solely in your mind, fears of this coronavirus? Are these people that are just adjusting to what a lot of people call the bubble, and there's some correction that needed to happen? What are you seeing with all of this? What's this saying to you?
This year, things definitely started to slow some as far as the underlying economy, but this was definitely the catalyst for things starting to slow. It's very emotional, is what I'd say. And that's, again, why people just don't want to call their investment guy or their financial advisor and say, sell everything. And that's really what we're seeing here, because we have a lot of good assets that are strong assets that are starting to be devalued, and it's just all emotion. So yes, I'd say primarily it's because of the coronavirus fear, more so.
Would you say to people that are listening, is it a different message, let's say, to someone that is in their 40s versus someone that's in their 60s? Or right now, do you think it's this small of a blip that it's not going to affect any of the demographics as far as age go differently?
Well, it's all based upon somebody's risk tolerance. And what I mean by that is that is a condition of somebody's age. If you're in your 40s, of course, you have 20 years, 30 years before you start needing the money. But then somebody in their 60s, they may be closer to retirement. So if they're working with a financial advisor or professional, that initial assessment would have been very important, knowing that 3 years from now I might be needing the money because I'm going to be retired. So I'd say really the same message to either a 40-year-old or 60-year-old, and that's don't lose your cool and don't get too emotional, because what happens, we call it in this business catching a falling knife. And what I mean by that is you're going to have to time this downturn right 2 times. Meaning if you just say, let's just go to cash and let's just not be in the market anymore, well, now you're going to put it in cash. Interest rates are so darn low, you're not going to earn anything. We know that there's going to be a cure to this. There's going to be a fix. If we look out 1 year, 2 years from now, you have to ask yourself, is the coronavirus still going to be a potential pandemic? And the odds of that are absolutely not. So then you have to time when the right time to get back in is, and it just doesn't work.
So then when you look at this, do you really believe in the near future that we're going to see this turn back in the right direction? And is this weekend, is having a 2-day pause, that's got to be good news for people that are investing, where maybe at the stock market, the Dow, and we're watching the traders need this couple of day break to take a deep breath?
Well, I mean, the 2-day break could be a good thing or a bad thing depending on what news. I mean, all the trading is based upon what's going on in the news. So if we have some bad news on Saturday or Sunday, we're going to see a repeat of the last few days starting again next week. So I don't know the break is going to help anything other than it's going to provide more news. So if the news is positive, then of course it's going to be a good thing. If the news is negative, then the slide is going to continue.
I'm glad you brought that up, because a group of Israeli scientists say they're only weeks away from a vaccine. We know that Nancy Pelosi also said that there is a bipartisan agreement that between $6 and $8 billion is going to be set aside for America to prepare for this. That's got to be good news for people, right?
It's got to be good news. I mean, a vaccine is a little bit different than an immediate cure. That's going to prevent it in the future. But, I mean, we're headed in the right direction for sure. I guess one silver lining in this is the interest rates are so darn low. If you're in the market to refinance a house, now's probably a great time to do it.
Well, Jeff, I always appreciate the expertise and the short notice of coming on, and thanks for talking with us.
You got it.
All right, that is Jeff Jr. from Trajan Wealth, and that's why I keep saying I'm not an expert, but you heard it from the expert. Don't lose your cool. And same message for the 25 or 35-year-old as it would be for a 65-year-old as far as not losing your cool, what's your risk tolerance level, and watching the news this weekend to see how the next week starts. So sound advice from obviously someone much smarter than I am on the topic. When I look at